Brace yourselves for a wild ride throughout 2016 as we see increased volatility, violent market swings, and an intentional ignorance of the truth. With countless billionaires, mega corporation heads, former government officials, and a host of others warning about the heartbeat of the global economy seizing into cardiac arrest. The evidence continues to mount. Suddenly, it will be too late, and the general public will be left holding their garbage paper assets and the promises they have been given that they will one day be worth something. You came here for the truth, so let me unveil that for you. Today we are going to get into 2016 and how bad it can get. Generally, I like to touch on a few different articles and moving through them quickly, but I found this one particular article which highlights many of the points that I have been covering over the previous weeks and months. So let's dive into it and really dissect it and bring up the issues which will certainly be coming up throughout 2016. Beginning with this from The Guardian, fears that the global economy could be heading for a repeat of the 2008 financial crash have sent shockwaves through the financial markets, prompting a rush to safe havens by investors. When they say safe havens, you have to think government bonds, which I don't believe are considered safe at all. What I would also like to touch on from this is that the 2008 financial crash, and they keep referring to the fact that we are heading back to there. I called this the financial crisis part 2 consistently for quite some time. I said specifically that the financial crisis technically never ended. They simply were just kicking the can down the road, postponing the actual crash part of it. They provided a crutch underneath it, but once the crutch is removed, this will fall. Oil prices fell to a fresh 12-year low, metals prices tumbled, and they're talking about China's slowdown could derail the global recovery at a time when central banks came to the rescue and the credit crunch have only limited firepower. What they're talking about here with this limited firepower is suggesting that they have made laws which prevent the Federal Reserve and other central banks perhaps to not be able to bail out individual institutions. This is a complete lie because we know that when times get tough, they will bail them out. There is such thing as too big to fail. They won't allow them to fall unless they're doing so with intention to crash the economy and bring in a new monetary system. This could be the solution for that. However, I'm not necessarily going to suggest that that is going to occur at this time. All I'm saying is that having limited firepower, what they say, they put these laws in place. When the times get tough, they will come together and they will decide what they want at that time. We will have no say in it. Oil prices as well, I'd like to just get into that in a moment, but think about oil and think about how it's supposed to, any commodity in fact, when it gets too expensive, number one, you start looking for alternatives. You start looking for new places to mine or dig or whatever it might be. And you have a slowdown in a sense because you can't purchase as much. Perhaps your buyers aren't going to be buying as much. And this takes a toll. Hold on to that thought for a moment. I'll bring it up in a second here. Right now at the bottom paragraph, they're talking about the World Economic Forum, also known as Davos. And these individuals come together, and they're high-profile people generally, and they will come together and not necessarily decide policy, but talk on a public forum about what they want. Previously, they suggested the $100 trillion bazooka in order to support this economy. That's the type of suggestions that you will hear from Davos. And they just touch on a few other things. Earlier this week, China recorded the slowest rate of economic growth for 25 years. I cover that here as well. China's slowdown is not in the negatives. Remember that right here. But it is, in fact, the slowest level in 25 years. So it is a number of significance. So when we have this important crisis to deal with, this is the kind of thing that I have to see. Bono, Spacey and DiCaprio, Trudeau chats with celebrities at the Davos reception. The Prime Minister of Canada, also known as the celebrity of Canada here. That's what we have now. We have prime ministers and presidents who are more of celebrities than actually doing business. But he's there talking to celebrities when he should be worried about the economy itself. Because this is a joke. This is all propaganda. If you think you read the news and you're reading information, you're not reading information, it's propaganda. It's all being controlled and manipulated. Yes, they may actually discuss real facts, but the articles have a viewpoint. They are trying to sway you in a particular direction. And I'm not talking about left and right. Those are complete frivolous. That is just something to distract you. I'm talking about sway you from the truth, and I should say that away from the truth, essentially. Look at this. Stock markets in Russia, Brazil, and Saudi Arabia also dived as concerns mounted that these countries are badly hit from the fall in oil prices could be forced to dip further into reserves to prevent an economic crisis. Global equities have had their worst start to a year on record. Huge. This is huge news. Okay, let's begin with this. Oil. I brought it up before, but it is crucial to mention this. The fact that if oil prices are subdued, they're brought down, and a nation that exports oil is going to suffer, at least temporarily for that period of time, until they can reshuffle things. Perhaps that never occurs again. What about the countries who have to buy oil? What about the countries who need things shipped to them? All of a sudden, transportation is cheaper. This is a boost to the economy. Excellent. That's Economics 101, fundamentals. I see a lot of comments about that here in the YouTube channel. But look at the real economies around the world. We have had this continuous decline in the price of oil for well over a year, and there has been no economic growth. Even though the price is now down to multi-year lows, there's no growth in the economy. There is more spending now than before. There's more debt now. There's more deficits now. Why? Are all of the countries, their major export is oil? No, absolutely not. Many should have an economic boost because of the prices of oil, but that doesn't happen. This is not the way it works. Economic fundamentals have unfortunately been thrown out of the window. In the bottom two paragraphs here, this is something I've covered just recently, talking about the biz and what they have said. But let's go on to this. Concerns that the global recovery could be derailed began last summer when the devaluation of Chinese currency caused a meltdown on the Shanghai Stock Exchange. China is being used as a scapegoat in this case. However, I would just say that they are just one problem of many, many, many problems. A series of economic downgrades to the Chinese and U.S. economies since then, coupled with the rise in U.S. interest rates, have fueled investors' misgivings about optimistic forecasts for a recovery in economic fortunes. What they're worried about is getting the stock market to a higher price. It doesn't matter how devalued the dollars are. What matters is, can the stock market rise? And I do believe they can get it to rise from here. We may never see another ounce of deflation again, but remember that they need to continue to print money, and not in a linear fashion. They can't print, let's just say, $1 billion a month every month forever. They need to do it exponentially. It's $1 billion now, 6 months it has to be 2, and then 4, and then so on. It needs to continue like that, because the more it takes, the more it has to take. It's just the way this works. They talk more about Davos, but what I wanted to mention is this. This is huge. Last week, an investment analyst at Royal Bank of Scotland advised clients to, quote, sell everything except for the safest high-grade bonds after a warning of a cataclysmic year and the strong likelihood of a stock market crash. Am I saying that in 2016 is going to be a cataclysmic event? No. Do I think it could happen? Yes, absolutely. But I'm not necessarily going to bank any of my money on this. And people decide they want to short the stock market and things like this. I believe, if you want to do that, go ahead. I just point to this type of stuff. That's what I do. I believe in diversity. I believe in holding real assets, and understand that anything could crash, anything, because they're all traded on the exchange markets controlled by people like the Rockefellers and the Rothschilds. We don't have any control of these markets. And then right here, the British Chancellor George Osborne warned in a New Year's speech of a cocktail of threats to the UK's prospect from an increasingly uncertain world economy. Wow. I do agree with that. There is so many different reasons why there could be a decline at this time. And just quickly, the one that never gets mentioned, and I will continue to bring it up for as long as I'm around, this is the derivatives. Whether it's a CDO, as I show you in this image from my book, or it's any of these other derivatives. What we have is the biggest, worst thing in the financial industry. There's high frequency trading. There is all of the criminality that's going on. There's off balance sheet figures. There's everything. All types of schemes and scams. But the worst of all of them, which even I don't cover enough, but try to do so as frequently as possible, is the derivatives. We're talking about many multiples more than the stock market itself, many multiples more than all of the GDP of the earth. Everything put together doesn't add up to the derivatives. In this example here, for those who don't know, I have a video actually about derivatives. If you want to know what they are, just go over to the main YouTube channel page for myself, The Money GPS, and I have a video in the eCourse there. But essentially, this is collateralized debt obligation, CDO. You have, for example, car loans, mortgages, and credit card debt. They take all this debt, they put it in a package, they put a little fancy bow on the top, right on the side of it, CDO, and then they get their friends at the rating agencies to rate it AAA, the highest rating possible, and then they sell it to an investor. So you take garbage debt, the worst of the worst, but you take it from all over the place, and therefore, according to them, it's well diversified. You have different people invested in different things, and it's from all over the place. So, of course, it's diversified. And this type of thing was one of the problems that was exposed during the financial crisis. This is the ultimate disaster waiting to happen. Whether or not something's going to happen within 2016, I don't know. But when it unravels, it will unravel very, very quickly, and there will be no reaction time possible. If you found this video informative, please give me a thumbs up. Last but not least, just wanted to mention that if you found the video informative, you'll definitely find my book, The Money GPS, even more informative. If you head over to Amazon, they have a look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.